Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Report, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Let's take a look at some stocks on the move today. We're joined by Bloomberg News cross-asset reporter Emily Grafeo. Emily, a lot moving in the after hours.
We have a lot of the big tech stocks reporting earnings. So let's start with Microsoft, ticker MSFT. This stock was down as much as 4% in after hours. Now it's only down about 2.5% in, just the first hour of the post market. The earnings, EPS and sales were above estimates. And then the cloud service revenue did beat the average analyst estimate. So revenue for the first quarter, $77.6 billion versus estimates of about 75. The EPS also came in above. I mean, overall here, the stock is down, but when you consider the headlines that we're getting out of some other tech companies for this earnings, I would say so far so good for Microsoft.
First quarter, as you said, cloud. First quarter, Azure and other cloud revenue,
right,
ex currency, up 39%. The estimate was 37.1%. Our own Anurag Rana saying that's a good number.
He did, yeah. He's out with a note, and he's going to be listening on this call, but out with a note right now. It says Microsoft's fiscal first quarter capital spending, including leases, came in at $34.9 billion, much higher than consensus $30.1 billion. And though this metric may raise concern for some, we see it as a signal of rising AI workload demand. That number's good news to Anurag and the team.
And I guess as long as the demand is there, right? Like the spend makes sense. Where do you want to go next?
Okay, Google.
Okay.
So ticker GOOGL. We're talking about Alphabet here, the parent company of Google, rising. It was up 5%. It is now up.
I know it's moving around a lot.
It's moving around a lot.
Still up about 4.8%.
Yeah. In the post market, reported quarterly sales that beat analyst estimates. We were talking about Microsoft's cloud unit, but the cloud unit over at Alphabet also doing well, which is growing as AI startups seek Google support and computing power. So the revenue for the third quarter beat estimates, coming in at $102.35 billion. The third quarter EPS also beat estimates, $2.87 a share. And they boosted their full year CapEx projection. So they see full year spending on capital expenditures, $91 billion to $93 billion. They had seen $85 billion. This is all on that continued spending on AI data centers that they need to do and custom chips. This is the big story, I would say, of tech stocks in 2025 of like, how much are you spending on AI? When is it going to pay off? What exactly are you buying? What are the projects? So listening for more of those.
Well, sometimes investors are cool with spending money on this stuff. Sometimes they don't react necessarily the way you want them to if you're long a stock.
Yeah, so sometimes they don't. I think we're all thinking of Meta here, ticker META. That stock is down over 7% after reporting earnings. And this is coming after Meta said it expects total expenses to significantly increase in 2026 as the company has to spend on data centers and other equipment to fuel the efforts in AI. You have to wonder if there were some specifics about the spending plan that maybe investors are picking up on, that it was different, that they didn't like that versus Google's. But yeah, I mean, it's a bit confusing here to see the stock down on this news, and then Alphabet obviously doing well on their promises to spend more on AI.
Yeah, it's kind of fascinating, right? Like the stories being told by each. I mean, keep in mind, Meta is up almost 30% here in 2025. Alphabet is up about 45% here in 2025. And like, what's Microsoft? Microsoft is up almost 30% this year. I mean, whoa, these guys have been on fire, and we know that.
And we are getting more headlines out of Meta that the company reported third quarter net income of $2.71 billion, which included a non-cash income tax charge of $15.9 billion due to the implementation of the tax bill that was signed into law in July. So again, this is something that I don't think investors were expecting out of the earnings. So could be weighing on the stock as well, that they're reading headlines about a tax charge and these headlines about expenses increasing. So at least for the post market, that stock is down after those earnings.
I will say, too, we're getting some calls on the live blog. Meta assuring analysts on the call that it still expects significant cash tax savings for the remainder of the year, despite the hefty tax charge. They are talking about Zuckerberg signaling that Meta may have some news coming on its AI models and products, saying that his team has been heads down working on the next generation and that he's looking forward to sharing more on that over the coming months. For those who are on radio right now, Tim is playing around with his glasses.
Because that's what Mark Zuckerberg thinks the future is. He may have renamed the company Meta Platforms, but he's really leaning into augmented reality and virtual reality.
Meta
with these
Ray-Bans.
Meta Ray-Bans, yeah. Called it out in the release.
Yeah.
You're not wearing them.
I'm not
You're
wearing them. But you know, it is fun if a friend is wearing them and then they take a photo of you. Then it's like, oh.
Sebastian, one of our producers, does that at some of our events. It's pretty cool.
Yeah.
He likes those Meta Ray-Bans.
Mark Zuckerberg saying on the call that he's investing in computing capacity based on his most optimistic forecast for achieving super intelligence.
Yeah, I mean, this is like hundreds of billions.
Does super intelligence come with a cape?
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.